Good afternoon, everyone. A lot of traders are coming in, so I'm just going to wait another 60 seconds, and then we're going to start. Okay, good afternoon, everyone. Thanks so much for giving me your time today. The only slide I'm going to show you is this disclaimer, and then we're going to really do the webinar completely off of our trading charts. All signals and trading opportunities provided both orally, written, or electronically that are disclosed to visitors or subscribers are for educational. And this, by the way, I'm Mark from Right Line Trading. Demonstration purposes only. Right Line takes no responsibility for any participation by visitors or subscribers within the futures or Forex markets, nor for any profits or losses that may be incurred. Participating in trading in the Forex, futures, and stock markets does involve substantial risk, and it should be understood that a person can lose a substantial amount of money. Therefore, the participation in these markets is not appropriate for everybody. Careful consideration of your financial position to be made prior to trading. Do your own due diligence, consult a financial advisor prior to making any trading decisions. And Right Line Trading is not a registered financial advisor and not a licensed commodity trading advisor. Now I'm going to drop the slides. And what we're going to do, I'm closing up my deck, is what we're going to do is I want to start off by showing you our performance for the week. We made $1,810. We had 21 winners and 1 loser. And you're going to see that I really had 22 winners in a row. I mismanaged 1 trade. Percentage-wise in trading, it was 95.45%. It was just an amazing trading week. And the software has become so powerful that I really want to go over our trading methodology and our trading entries with you to show you exactly how we did it. Now I'm going to start with the NAS. I'll start with crude because there were only 2 trades for the week. And I'm going to talk about our trading methodology and what we do to look for entries. Because this is a last opportunity for some things, and I want to give you the opportunity to get in on. Now, the first trade I took on crude was on Monday. I already know it because I went over this with everyone in the trading room. It was on 5-6. It was right here. My entry was actually right here. And my entry that triggered was 1 tick above the close of this candle here. And I managed to parlay this trade into a $40 loser. Now, don't ask me how I did it. I can't really explain it, but I took a $40 loss, and this was a $220 winner. It scaled out to 16 ticks if you scale it correctly. So this was the only loser of the week. Now I just want to show you what I want to describe is what I'm looking for when I take a trade. Now the green background is the absolute choice time to trade, and you're going to see that almost all the trades I took were on green background bias. The green background bias tells us that we're aligned to the upside on our two higher time frames. Now, if you've heard me talk before, you know that we use the triple screen method. Obviously, we use our trading chart, but our indicator analysis is all done off the two higher time frames. Now, that dark green means is that the 50 is up, the 15 is up, and it's crossed the 50, and price is above the 15 and the 50 on both higher time frames. So we are trading in a multi-time frame trend. Now, the only thing that can create that is institutional money. Because here's what happens when there's no institutional money. You get no background and the market chops. And taking a trade when there's no multi-time frame alignment is so risky that we just don't do it. And you have to remember that our goal, this is all about trading methodology and the way we look for a trade. And our goal is not to get winners. Our goal is to avoid losers. And if you can really plaster that in your head, that's what makes a trader truly profitable week in, week out. You never chase a trade when it's not going to give you a low risk entry. And any trade taken when there's no multi-time frame alignment and trend is going to be high risk. And we also don't have a lot of other things we need, but the lack of background bias alone is enough to allow me to simply say, I'm not going to touch anything that happens in this area, no matter what I see. Now, green is our strongest up bias. And that's when you really want to trade. Now, the most important thing, I'm going to take these two arrows out. The most important thing in taking an entry when you trade, and if you don't do this, I hate to make a dogmatic comment like you're making a mistake. What I'd rather say is that you're missing out on a really good opportunity. Is that you only want to take a trade when you have traders trapped in the wrong direction that you can exploit. On the entry, you'll notice we had a wick, a pullback wick. Now that's a bear failure. The sellers tried to pull the market all the way back to create the wick. So we know we have a significant amount of sellers caught in this candle. In addition, we're breaking this pivot. And this pivot also has a significant amount of sellers. Look what happened when price came up to it here. The market turned because the sellers pushed the market right back down. So if we had an entry here, we didn't, but if we should have had a setup, we wouldn't have taken it because we know that there's sellers sitting right here. And we have a very unique pivot indicator that creates its line off of a candle body, not a wick, like most pivot indicators do, and only breaks the way it should on a 2/3 candle close above it. That's how it's coded. And that's what makes it so powerful. So on the entry, I was able to exploit a lot of sellers on this trade. And that's what helps guarantee the continuation of the trade to the upside. And you're going to see how I did that time and time again. Now, the quant line tells us that markets that correlate in direction with crude, which are very important, are also moving in the direction we want them to. And then we have two assessments of momentum: long-term assessment and our chart assessment. And I want you to understand fully what momentum is. Momentum is not just the direction of price, it's the acceleration of price. In order for momentum to rise, like it does here on the chart, on our chart here, price has to accelerate to the upside. If it simply moves to the upside at a constant speed, momentum will be constant. So momentum is a great way to track a move that's moving up with great conviction. And like we always do on all of our analyses, this is a multi-time frame analysis, this middle line. The bottom line is our chart analysis, because in the case of momentum, we need momentum moving up from our chart, as well as the two higher time frames. Once they both lock green, you've got a great trade. So we're in the trade in the multi-time frame trend direction, in the same direction as the correlative markets that track that move in the same direction, or the counter direction is crude. The dots are the same, they're dark, which tells us our correlative markets. This is a little bit of a neural net. No single financial instrument moves in isolation. What happens is that that big money shifts their money from financial instrument to financial instrument based on risk. And that's why you really need to use a neural net. The dark dots tell us we've got our neural net in our direction, and you can see they have differing color. And as they get darker and darker, they get stronger and stronger. The circles are the slower moving average, and the X's are the faster. And this is a 4-quadrant analysis. It's just too complex to tell you how this assessment's being made. I do that in a mentorship session, except to tell you that we're moving in the direction of the correlative markets. So what we're doing is we're moving in the direction of money flow, and we just want to make sure we don't run into a bunch of traders who decide to push the market back for one candle, stop us out, and then go. So we need to exploit traders caught in the counter trend direction on our entry to guarantee it's going to propel us through. In addition, the candle is haloed in blue, and that's the multi-time frame assessment of order flow. And the way we do order flow, which I'm also not going to go into detail about it, is really powerful. You want to trade in the direction of order flow. So you've got significant buying pressure here. And then the only other trade I took on crude, this was a trade we were done already for the day. But this was another unbelievable trade. The quant dual gears, so the trade's accelerating to the upside, dual dots, order flow, and I love it when we get a reversal candle, because now we've got all these traders trapped short, and we almost can guarantee that we're going to get the continuation trade. Now, I scaled it at 21, but you can see if we took the trade, we didn't, because we were done for the day trading. We already hit our profit target, and we were out. This would have gone 50 ticks. Exploiting the counter trend traders was the key to making sure that right at the outset, we're not going to run into this retracement. In the direction of the correlatives, momentum, the whole thing is accelerating to the upside. We've got the multi-time frame direction of the trend, and this is a very, very low risk continuation trade. And I'll just quickly show you my second trade. And then that's it on crude. all the other trades I took were on the NASDAQ. It was right here. It was the break of the pivot. We've got all these buyers caught long. It was the next candle after the up candle. So we've got these buyers caught long here. And you'll notice the up candle had down order flow. So they're going nowhere. On the entry, we have pink background, best multi-time frame, the strongest multi-time frame assessment to the short side, order flow to the downside, the magenta halo. I had the quant, I had my long-term Laguerre locked short, and the chart Laguerre was just about bumping to the downside. It's not quite, but it's good enough. And the trade went 33 ticks. That's all I took on crude for the entire week. There were other opportunities, but the problem was at the NASDAQ. On the NASDAQ, we only traded for 2 hours this week to get those trades. Because the NASDAQ, like today we finished in 15 minutes. Yesterday we finished in 8 or 9 minutes. On Wednesday we finished in 7 minutes. Because the NASDAQ is providing us with such incredible opportunities in this really volatile environment that we don't have to stick around very often or very long. And I'm just going to go to 5-6. I've marked out all the trades. And remember, our goal is not to get every winner. Our goal is to avoid every loser. And this week, except for my poor management of trade number 1 on crude that you saw was a winner, we avoided on 22 trades. We had really 22 winners. After you take the trade, there's always a management issue, and I really flubbed that trade. And that was my first trade of the week. And it cost me 40 bucks instead of making me 220. But we still made 18.10. After commissions, 16.10. That's a lot of money on a $5,000 account. That's 30% on a $5,000 account in 1 week. Now, I'm just going to go over then all the trades we took on the NQ. Today, our first day of trading was 5-6. I have them all marked. Now let's go to them. Because this, I think, not only does the indicator system work tremendously well, but the methodology is what's really important. A triple screen assessment is what you need to get into trades on a low risk basis. And if you don't use a triple screen, you're going to have problems. Now, this was the first trade I took on the NASDAQ for the week. It was right here. And you can see we've got all these sellers trying to call a market top. Why are these traders short? They may be trading some of the things that you're trading now. Oscillator divergence, MACD divergence, Fibonacci, Elliott wave, Gann theory. Those are all gone. There's only one way to trade now. And the only way to trade, since the market is dominated by institutional money, is to use indicators that track its footprint and get you into a trade in that direction. If you trade these systems that predict where price is going to turn based on some mathematical formulation, it isn't going to work, because I'm telling you, institutional money doesn't care about, remember, for Fibonacci, there are 500 million Fibonacci interpretations, depending upon your time frame, depending upon the kind of candle you're trading, depending upon a million other factors. There's a million different fib levels that you can trace out. There's 100 different variations. So an institutional flip of the switch of a computer-generated move that starts throwing in an enormous amount of money into the market isn't going to care about the fib level that you have on your 3-minute chart, or that John has on his 2-minute chart, or that Joe has on his 5-range chart. They all trace out different fib levels based on the previous swing high-low, and all of them are irrelevant. An Elliott wave and Gann theory, which look at the intrinsic waveform of the market, is all distorted by institutional money. Even Japanese candlestick patterns, which are predicated on the fact that each buyer and each seller have equal power, that's really the basis and the root 400 years ago of what what the rice traders did when they created these candlestick patterns. And when they created them, they were right. There was no institutional money. So essentially, the power of every buyer was about equivalent to the power of every seller. And I love Japanese candlestick patterns, but I'm telling you now, if you trade them, you're going to get killed. And there's a lot of companies out there who just tell you, use these candlestick patterns, use them, telling you they're going to destroy you. Because when institutional money is put to work, what if the previous candle was an engulfing candle, or a dark cloud cover, or a piercing candle, or a shooting star, or a doji, you're going to get wiped out. What we're looking to do is always exploit traders in the counter trend direction, and then take the trade in the direction of our proxies of institutional money. Here, we've got a multi-time frame alignment to the upside. It's slightly weaker, the cyan, than the green, but it's still a strong uptrend. We've got these quant lines are looking at the direction on a multi-time frame basis. If you take a long trade, wouldn't you also like these markets to be going up to the RTY, the ES, and the Dow? Well, that's what these lines do. They're tracking the direction on a multi-time frame basis of the Russell, the E-mini, and the Dow. And if institutional money is driving up this trade, all the index equities are going to rise too, because they're going to be buying stocks, because risk is on. These correlative markets, which assess on 2 time frames, these 3 markets are going to go green. And the trade is going to accelerate to the upside. Now here, momentum on our trading chart was not so great, but our multi-time frame assessment of momentum, which we must have, was green. And we had all these sellers to exploit. We're only 1 candle off the beginning of the trend, and we took it to the upside. And that I thought I had scaled it, but this was a really nice winner. We made a lot of money on this trade. That was at 10.25 points. Now the continuation trade I didn't take. On this trade, I didn't have the long-term Laguerre. I didn't have my fast correlative market line. It became a winner, but I don't care. I'm not going to take a trade where my charts tell me I've got risk. And all we can do is avoid risk. And on the right edge, I didn't have any clue whether or not that was going to continue to the upside. So I stepped aside and I didn't get it. And you can see this goes, we don't trade into pivots. And now we've just got a whole bunch of chop. And there's my second trade right here. which went for 10 points at 938. Now, we have hybrid Unarenco, which don't save the candles, but we had a pullback wick inside. It's not there now because once you close the platform, Ninja does not allow them. I'll show you the right edge really quickly and then I'll move back. See how it's creating these wicks inside so we know what's going on? Well, once we open and close the platform, those wicks cannot be kept. So on that trade, on 5-6, was right. Hold on. Right here, we had the 10 points. We had a pullback. And again, we had 4 greens, dual quants, dual Laguerres, lock long, green background, dual dark dots, order flow aligned to the upside, and we were up for 10 points. So we were done. We were done trading at 9:38 in the morning. Finished on 2 huge winners on crude, on the NASDAQ. We hit our profit target of almost 500 bucks. We're done. So all the other trades are potential trades. This was another winner. And I could go on and on. I don't want to show you every potential trade. I just want to show you this area. You can see when there's no multi-time frame alignment and trend, we just don't trade. And you can see that everybody here is just getting eaten alive. And this is because the 2 higher time frames provide us with no alignment, and we're not going to take a trade. There's no institutional money at work in here. Look at the quants or the Dow, NASDAQ, and Russell direction. They're all flopping around. Momentum, we don't have any in our direction. Our chart momentum is heading up. That is not enough. So we just stand down. We leave these trades totally alone. And he was another winner for 16 ticks. Another winner for 9.25 points. And I'm just going to end our assessment of trading on the 6th. We were done in just a few minutes on 2 really beautiful trades. And this was another trade we didn't have to take. This one went 15.5 points, but we were done. And one thing that's really important to do when you trade is you have a profit target. And once you hit it, you stand down. Because you don't know what the right edge is going to have in store for you. The NASDAQ could go into total chop and take all your money back. It just so happens in this particular day, we could have tripled the amount of money we made. But since you don't know that, if you don't step away from the market, if your profit target is $400 to $500 and you don't step away, you can wind up down for the day. Just so happened today, as it was most days, we left a lot of money on the table. Now we're going to go to the next day. Look at this trade on the pivot. We don't even need to look at the wick. I know there was a pullback. We stopped out all these sellers, and this trade went, I don't even know how long. This is a super low risk entry. It's got everything we want on 27 points. Only was 2 o'clock in the afternoon, 2:33. We were long gone from the market, long gone. But you see when they occur when you get green background, when you have the Dow, the NASDAQ, and the Russell on a multi-time frame basis, moving in your direction. That alone shows you that institutional money is at play. You're not going to get a multi-time frame NASDAQ, Russell, and Dow assessment. I'm sorry, E-mini Dow and Russell assessment to the upside, and have the trade accelerating on 3 time frames to the upside, unless institutional money is pushing it up. And you see what happens on these greens. On the blues, weakest of all the 3 up colors. But it does tell you something important. It tells you can't trade short. And that's the end of that day. So let's go to the next day. So remember, on every trade, we have to run over traders in the counter trend direction on our entry to help us guarantee that we don't get that jiggle pullback, that one up candle that will stop us out, and then the move will continue. We let that happen first, then we exploit the traders in the counter trend direction, take the trade in the direction of the multi-time frame trend, the neural net, which are these dots, are the Russell and the E-mini on 2 separate time frames. The dots are looking at both markets. This is a faster moving average, and this is a slower. When they're both turning your direction on this pullback right here, there's an entry short. And that's another winner. These are when you get all your winners, and they're extremely low risk trades. All the other times, just leave them alone. And what's great and key is that no indicator assessment is made based on looking at how price on your trading chart moves. It's all based off of price movement on the higher time frames or order flow off the higher time frames or a multi-time frame assessment of other markets. That's how you can get 22 winners, really, and no losers in one day, in 1 week. Now here's the market open, and there was our first trade. I got this trade, it was 10 3/4 points. Now blue is the weakest of the up colors, and I took this against order flow. Order flow is down, but I like this trade too much to let that one independent variable take me out of this trade. Took it anyway. I had dual dots. I had my uptrend with the blue, was the weakest. So it was probably one of the riskier trades I took. But the key was I had both of my quants. I was trading in the direction of the Russell, the E-mini, and the Dow, and I had momentum. Look at the chart momentum, stoking up. This trade is not just moving up, it's accelerating up. And my multi-time frame momentum assessment is already locked long. And it can only lock long if the trade is continuing to accelerate on the higher time frames. So first trade, 10 3/4 points. There was my next trade. And this was the riskiest trade of the week I took. Didn't have the fast quant, and I was 1 candle off the long-term Laguerre. It was risky, and I went 18 ticks. I'm not going to say it was luck. I did have green background. I did have dual dots. I did have the slow quant, but that was a riskier trade. I like the pivot breaks because I like to stop out all the traders who are sitting waiting to sell the market at the pivot. When the pivot snapped on the 2/3 candle close above the pivot, it just shoved the trade up. There's no luck involved in the market. I'm telling you, when you get winners like this, it's because you're making a good assessment of risk. And I knew this trade was a riskier trade when I took it. But that's the discretion involved. We're about 2 weeks away from an auto trader. The auto wouldn't have taken this trade, but I took it. And in retrospect, I want to make sure I didn't make money on a bad trade. It was a good assessment only because I had the pivot breaker and the dual dark dots, and I had momentum heading in my direction. Then I just let everything else go. There was nothing to trade here. Couldn't get into anything. Remember, I never worry about missing a move. And you know what? We were done. That was it. This was a $275 trade, and this was a $150 trade. This was a $150 trade, and one of the winners on crude was today. We were done at 9:38 in the morning. So I have no more markings. We hit our profit target and we were done. Fini. 8 minutes. Now, if we just go through the charts a little bit and we look for the duals, so we don't have the benefit of the wicks. There's your pivot breaker right here. And another winner. They almost always occur on the dark pink. Here you have the break, but look at the Laguerre multi-time frame. It was green, then it goes to yellow, and you don't have the fast quant. And look, so you have a lot of problems on the short trade, and you don't take it, it's a loser. The trade was censored by the system. I didn't have to face this trade because we were done. What happens always when you have no background? All the way through here, really? Don't trade, because you're just going to trade a mess. And everybody in here is getting murdered. I mean, this is the massacre. This is where you don't even look for a trade. And I'm gonna go to the next day. We're already on Wednesday. And let me tell you, our trading time has not been very much. And let's go to the 8th. Because I'll go back and answer questions if you have them. Now, if we have less volatility, we won't finish in 8 minutes. We'll finish maybe in an hour and a half, maybe in 20 minutes, maybe in 30 minutes. But we're not going to take a trade unless we get that similar alignment. And we get it with good volume. So let's go over to the 8th. Here's the 8th. Now, nobody does this or has this kind of transparency where they show you the trades they took, every trade, and they show you the NinjaTrader back end to verify. I mean, most other rooms, trades appear, they disappear. You hear about a winner when you're 3 ticks up. These trades are all called with chart trader up, well in advance of the trade. And look at that trade for 10 points at 9:30 on the nose. Now, I usually do not trade this close into the open, but this was such a good trade, I could not lay off of it. And right at the open, we got a full winner for 10 points. Now we're trading around pivots, so when there's nothing to trade. And there's no setups here. No background, we don't even look at it. And there's the next trade, right there. Dual quants, dual gears, break of the pivot, order flow, pink background. It went 19 ticks. 1 tick short of a target. I needed 20 ticks, I got 19 on that trade. I took this trade right here. This went 421, and we were done. 9:38. 2 pivot breakers right here and gone. Finished for the day. We made a lot of money this day because this was a big trade on 3 contracts. These two trades I took on two contracts, this trade and this trade. I want to keep the contract numbers small so everybody in the room can take the trades. So we're done. Again, 6 minutes. And if we go a little bit, there's another winner. If we would have traded. Dual gears, dual quants. This is not tradable. Order flow's wrong. No fast quant. No multi-time frame gear. So we missed the winner. Who cares? We've sidestepped 8 million losers. And doesn't make any difference. If we keep going a little bit, I mean, it's still only 9:59. We're done. And if we look around, we've got a pivot here, and we don't trade into them. We have a pivot here. We don't trade into them. Ever. Now, this was a potential trade. That's the break of the open, but we would have needed a pullback, and I don't know what the wick was. I can't see it. And the move down. So let's go to the last day. Today. It's pretty good when you can go through the whole week like this. We're going, no, this is 5/9. This is Thursday now we're going to. You know, look at this trade. This is 2043. That's a crazy hour. No one's going to be trading. Here we go. There's the open on the 9th, which is yesterday. First trade right here. Dual gear, dual quants. Powerful background. BISC to the downside. Dual dots. Order flow. 4 times 14 ticks. I took the pivot break. I didn't have my long-term gear. And the reasons why I took it, I'd have to go over the in a mentorship, but this was a good trade for 16 ticks and a winner. First two trades. Here was my last trade right here. Dual quants, dual gears, dual dots, order flow, pink background. It went 9 3/4 points. We were done in 13 minutes. Finished. Profit target and then some. Gone. 3 trades. Pink background, dual dots, dual quants, dual gears. A tremendous acceleration on the trade to the downside on a multi-time frame basis. Dow, Russell, E-mini heading down multiple time frames. The dots are telling us the same thing. Order flow is telling us the same thing. We don't care about Elliott wave. We don't care about fibs. We don't care about all that other junk. We care about our pivots, because that tells us in real time where traders turn the market. So this isn't some predictive line that was created by a mathematician 400 years ago that told us that the market was going to turn here. This is really where buyers change the direction of the market. So there's a lot of buyers sitting here. So you have to be careful when you move through a pivot. We could have closed the trade at the pivot, but if your first target's out and you're running with no risk, it snapped it and down we went. We're done. Now this was another trade, but I didn't take it because we were finished. And this one went 6 1/4. The pivot snaps are just incredible trades. Down for 6 1/4 points. I mean, we made like 30 points or 25 points on the NASDAQ in 15 minutes. And I think I did take that trade because I marked it out. And you know what? I did. I took 4 and out. Normally I take 3 and out. I went 4 and out yesterday. Anyone who's in the room knows it. And here's our automatic trade management strategy. Not going to go over them. You know, what our first target, second target is. I just want to go over really our methodology for trading the market and why it's so successful. Here is essentially no background. This is very weak down bias. So we know we're looking for a short trade, but we never get a setup. And then what actually matures is a potential long trade with no entry, potential short trade with no entry, break on order flow in the wrong direction, saves a loser. Ton of losers are saved by the system. Then no background. This was a break and we lost a winner. We never care. And we're still at 10 o'clock. So I could go over this and over it, but I'm just going to move to today. And today we were done in 15 minutes too. And what a great way to close the week. I mean, per hourly basis this week, we were making like $250 an hour because we traded so little. And I'll tell you one thing I do is if we hit our profit target or our first 3 trades in a row are winners, I stop. And this week, because the market was so volatile, I took 4 and out twice. I took a 4th trade, which is always really risky. You don't want to give back any money. Here's the open right here. We had nothing to trade. I didn't even look at anything here. I had no background bias, no alignment down here. There's nothing to trade. Just absolutely nothing here. Zilch. There's the pivot break. And there's our first trade. It went up 14 ticks. Perfect trade. Next pivot break. Now this was a bad trade. It went 9 ticks. I saved the loser because I saw it was a rotten trade and I closed it after I took it. I didn't let it come back and take me out. After a whole week of trading, I finally took a lousy trade. Look at the momentum on the trading chart. It's just flat. And I did not have the long-term gear. So the trade, simply because it was a pullback, that snapped the pivot, it still had enough juice to get up 9, and as soon as it came back a few ticks, I closed the trade. Because this trade smelled like fish as soon as I took it. And I said, okay, if I could get a first target out of it, I'll stick with it. When it went to 9 and came back to 8 and 7, I immediately told everyone to cover the close button and then close. And we were out of the trade with a tiny profit. Because you can always continue to vet your trade after you get in. And this was nice because this was very slow moving. And that was another problem. It didn't move fast. When you snap a pivot, you really want it to fire up, because if it's moving on dual momentum assessments, which is acceleration, it should fire up, and it didn't. So I knew there was something amiss. And if I was lucky enough to get a first target, I would have taken it. But as soon as the trade started coming back, I was out. So because we only made a little bit on this trade, I didn't count it as a winner. So I wanted to get 2 more. And I took this trade. This is a little risky. In real time, we had order flow with us. And this went 12. But I had dual gears and dual quants, green background, dual dots. Gave us heat. And this was a risky trade, I'll tell you, because it had really matured. It had pulled off the 15. This pullback was not very deep. And when I took it, I sensed it was risky. I thought I was going to take a loser. But with all of the stuff we had going for us, we got a first target. I did not take that trade. This was the trade I took right here. This was a zinger, man. And you can see here, the wicks are present. So I haven't closed the platform. So you got the move down. There's the pullback we're looking for. That was an 11 tick pullback. So we're catching buyers in the counter trend direction. We were in the candle, 1 tick below the close. And this thing fired down 11 3/4 points. And I must have taken this trade because that was the end. We had 4 trades today and we had 4 winners. I know I took that for 1 winner. I know I took that for 2. I guess that's the 3rd trade and that's the 4th. So I took 3 winners, 1 winner, smelly trade, I got out early, risky trade that I won, and then this gorgeous trade. 4 winners. And again, these are the bread and butter trades. Never press anything else. When you get this pink, that's why I really shouldn't have taken this trade. And this one I knew was a bad trade. So to close the week, I took 2 sort of risky trades. One I exited right away. The other one just gave me enough because I had enough on the trade to get to my first target. So we closed with 4 winners. But after a perfect week, I took 2 middling trades. And the chart showed them middling. But I shouldn't have rushed it. Just should have waited for this winner. And then I guarantee you, look at this trade. So all I had to do was wait for this. You can see the pullback inside the candle. Here's the trade. Here's your entry right here. See this nice pullback? Actually, the wick comes right outside the candle. And down you go. A huge winner. So don't ever press those 2 trades I took that were that were a little marginal. And it's always good to go over your trades and see what you did. Because these trades are always going to come. 21.5 points. You have a runner here on 2 contracts. I mean, you have a $400 or $500 trade. And you're done for the day on 21.5 points. And that's it. That's our week. There was another trade right here. In this trade, I love it when we get a counter trend candle. When we get enough crazy buyers to call a top, here they're calling a bottom, and we get this entry on dual quants and dual gears with this kind of acceleration as manifested by both gears, and the fact that the Dow, the Russell, and the E-mini are stoking down, and we have a multi-time alignment of our own market to the downside, and we've got dual dots, again, an assessment of the correlative markets, and we've got order flow. Man, you got it. And we got another one right here. Down you go on the pivot breaker. I mean, this is another entire day's worth of profit. So never press a trade. Just don't do it. And you can see on this volatility, now here, you can't take the trade. You don't have the fast quant. You don't have the slow gear, the multi-time frame gear. You just don't, you're not going to get every winner. But we avoided every single loser. And these trades are just very risky. No background bias. Here we have look at the multi-time frame gear. No acceleration in price in the direction we want to trade. No trade here. Nothing. And there's our trade. Kaboom. Full winner. And the only thing I want to point out, and then I'm really going to stop, because this is the whole trading methodology, is this was a terrific trade, and I went over this with everybody in the trading room, because this is called a dual bull failure. And this is Japanese candlestick dogma that works, because it takes into account institutional money and all the other stuff, if you look at this first candle right here, you don't have the long-term Laguerre if you look down. So that's a problem. And the trading chart Laguerre is heading up. Problem number two, it's not tradable. So you leave it alone. But what's great about it is it's a bull failure. The bulls tried to push the market all the way up on this big wick, and they failed. And the market continued lower. Now you've got everything. The gear on the trading chart has rolled to the downside. The long-term Laguerre is now turned red. The quant lines, the correlative markets, are now both red. And the bulls try a second attempt at turning the market and fail. And you're in one tick below the close of the candle. And I'm telling you, this one's going to rock, because these dual bull failures tell you you've caught a ton of traders long. And when this thing moves down, it's going to fire down. Look at the wicks on the move down. There's almost no wicks. Look at the tremendous acceleration you get. You finally get a wick, but that fails, and then you accelerate again down. And you don't usually get movement like this on the NQ. The NQ usually wiggles around. When you create these minuscule wicks, you know this trade is firing down super hard. And that's because we had all these buyers in the wrong direction. Almost guarantee we're not going to get stopped out on the entry. It's just a matter of how far the trade goes. And this trade went a long way. Now, optimally, the way I would always take these trades is you're going to be in one tick below. I would have taken it out at the pivot. So I don't trade into pivots. So I would have had 8 points, 32 ticks. The fact is it snapped the pivot, but I wouldn't have taken the continuation. It's too far off the 50. If you did, you would have gotten stopped out. It's a potential stop out if you would have chased this trade further. And it may be the first potential loser I've seen on the chart today. But you got 32, you got 8 points. So what is the probability that you're going to get another 8? You might. Let's see if there's a pivot below. No. Listen, it's a potential loser. I'm not gonna try to hide it. And it's actually a pretty good trade, because you not only snap the pivot, but you snap it on a pullback. So you not only got these buyers, but you've got everyone in the wick creating the pullback in the wrong direction. It just doesn't make it. And not every trade, I obviously, even though we honestly didn't get a loser, it's not, eventually we're going to pull one in. And when we do, it's usually going to be on a move that's a little bit extended like this. And this on the entry, which is right here, just doesn't make it anywhere. And there's no way you're going to get out of this without taking a loser. It's only 3 ticks. So there's your next winner right there. So you can just go on and on. So that's our trading methodology. You take this loser with a grain of salt. If you made the assessment, you felt the market was going to go lower, you took a loser on 2 contracts, you lost $260. You're going to make it right back. That's all. So that's our week. And that's how well the platform assesses risk and gives us great entries. 1810 gross, 1610 net. I just subtracted $4.50 for every round trip that we took, and it came out to right around $200 for our commissions for 1610. That's 30% on a $5,000, 21 winners, and the one loser I took was not really a loser. It was a mismanaged trade. So it's actually 100%. if you want to count the mismanaged trade, it was a great entry based on what I'm showing you. So let me see if there are any questions. I just wanted to go over the week because it really was a killer week. And we're going to do this every week. We've got great volatility and that we all have great patience. And we're going to wait for our trades. And the most important thing is to wait for the market to come to you. When I chased the market a little bit here today. And I like the fact that I reviewed it because I get to see it. And I chased it on those two middle trades. This one here. No, not that one. Where was it? I just showed it. Yeah, this one was a little bit of a chase. Not crazy about this trade, especially with that order flow. Should have let this whole formation go. And the next trade was not here. Where did I take it? Yeah, it was here. This was a good trade. There was one trade that I took, and I think it was this one. I don't like that trade that much. Oh, and this one. These were the two. I didn't have momentum with me on this trades, and I should not have taken this trade. This was a first target. This was a first target. The amount of money that I would have not made on these trades was small, and all I needed to do was hang in there after this trade for one more trade, and it came 3 minutes later, right here on this entry, to give me 21 points. It's just a good example of why you never want to chase the market. And even if there's just a small amount of associated risk, let the trade go, because these great trades are going to come. And if you can't take the pivot break right here, and you could take it. Why did I say you couldn't? You can. You have dual quants and dual gears right here. Bam, all the way down. So just an example of how to trade a week and make a lot of money. Every trade we took was 2 contracts, except for 2. If you look, you only had 2 3-contract trades. Every other trade, if you look here, 2, 2, 2, 2, 2, 1, 3 here, and 1, 3 here. That was it. And they made 275 and 275. That was all. So let me see if there are any questions about how we trade. What I'm telling you is a full system, and you'll get an opportunity to purchase it if you want, or to upgrade if you want. Because we're going to, I mean, everybody always says they're going to increase. We are. It's $13.99, and we'll send you a link if you want to get it. If you don't, it's no problem. And if you have the Laguerre order flow, you can upgrade for $6.99. And we are going to increase the price on Monday because it's too good. And we've put in too many hours of programming to make it this good. And we are in the process of making it better. So it's the last opportunity at those prices. And we are never going to offer it again for $13.99. It's too cheap. I mean, you would have paid for it this week after commissions. So if you have the order flow Laguerre at $6.99, if you have nothing, it's $13.99, and you're in the trading room with me. If you're in the trading room here, you're going to get an extra month, and here you're going to come into the trading room and you're going to get a month in the trading room, along with 1 million video tutorials. And let me tell you something. I spent more time in the room after trading than I did trading. We spent an hour today, an hour and a half yesterday, an hour on Wednesday, going through our trading methodology, our trade entries, assessing all the market movement. They were they're in-depth teaching sessions. We just don't close up the room. I mean, we were done at 9:45, but we didn't close the room up till after 11 o'clock. Because after we finish trading, we want to make sure of 2 things. One, we didn't get a winner on a crappy trade. And two, if we took a loser, we want to make sure it was a perfect loser. And if it was a perfect loser, there's nothing you can do. The market's never going to be perfect. We want to assess, did we miss any winners? Were there any great trades that we could have potentially taken that we missed? And look at everything. Because usually traders in the room ask me, well, why didn't you take that trade? Why didn't you take that trade? So it's a really, really nice exchange. And I always learn a lot. When I talk to the traders in the room, they teach me a lot of stuff. And just reviewing the day always reinforces for me what I need to take a trade. This really helped me on these two trades in the middle. This one I already knew stunk without the momentum, and this one was too far off. This candle body, I want to take these candle bodies pretty tight to the 15, or at least get a pullback right to the 15. And I didn't get it here. And that was just not a great entry. And this whole formation was best just left alone. And like I said, there's your next winner. So you don't have to wait very long. So let me see if there are any questions. Hang on one second. I mean, honestly, I'm really modest and I never, ever brag, but I think this is the best software you're ever going to find because we've done so much work on it. It's all multi-time frame and it's all multi-market, and there's just no software like it. All of the other stuff is using the same old tired junk, fib levels, oscillators, and I'm telling you, volume ladder, market profile, they're not going to get you consistent winners. They sound elegant and they're sexy, but they're not going to do it. The order flow assessment we do is a multi-time frame analysis. That's the only thing that's going to get you where you want to be. Order flow is a tough nut to crack because you can get a down candle on a positive delta and an up candle on a negative delta. So if you trade the volume ladder and you trade market profile, it can really mislead you sometimes. This is the best way to trade. So let me see if there are any questions. Hey guys. Sure, yes, you'll get a recording. Hey Barry. Which trade? Oh, that one on crude. I'll tell you what went wrong, Barry. Because I remember. I could just tell you I forgot, but I didn't forget because I was so traumatized. It was my first trade of the week, and I screwed it up. What I did was to remove all the drawing from the chart. We entered right here, and for some reason, don't ask me why. I mean, this is why you can't trade your emotions. And on this trade, I did. The trade was up like 3 or 4 ticks, and I rapidly moved the stop to break even right here. And the trade came back, and not only didn't take us, you know what I did? I moved it to -1, which is the stupidest place to put a stop in history. If you're going to move the stop, put it at break even. I shouldn't have moved it at all. And when it took me out, I not only was stopped out at -1, I got a tick of slippage. I lost 2 ticks on 2 contracts, and it gave me a $40 loss. Of course, the trade went right straight up. And I don't know why, because I traded my gut feeling. And that's the worst thing you can do. So my first trade of the week, based on my fear, when you can't trade with fear, was I cost myself $260, $220 of profit and 40 that I lost. And that's what I did. I rocked that stop to -1 way too soon. It came back, took it out, and then just rocked up. That was what I did. If you're going to trade with fear, you can't trade. Barry, this can work on a free, but you can't trade it. Remember, the free license, you can get a demo data feed, or if you have Thinkorswim, it can run it. You just can't trade the platform. To trade the platform, you need a live platform, and we are automating it, Barry. And if you own the software, you'll get a big discount on the automated version. Sergio is been working on it for months, and I'm telling you, it's going to be a revolutionary auto. And I swear to you, I don't talk in hyperboles often. Usually, I beat myself up every day in the room because I'm probably the person who's hardest on myself when I trade is me. And I tend to be I tend to get down on myself really, really much. The old auto we had was housed in a server in Chicago. And even though we put it in the center of the country, it had latency. This one is going to go on your computer. And it's only going to take the perfect trades. Dual dark dots, order flow, dual quants, dual gears, pink background, and it's going to trade 9 markets. So it's going to get you perfect entries on a lot of markets. If it works as good as I think it is, and I'll show you one other thing. When the auto fires, you're going to see the entry when we trade in the room. So if you want to double on it and take another contract, if you're trading the auto, this signal isn't operational yet. This will eventually signal intra-candle that the auto is going to take a trade. So it's really coming. And what we're going to do is we're going to put this signal on a dashboard, and you're going to be able to watch these on all 9 markets. And you're always going to get the signal intra-candle. You have plenty of time to enter. If you're trading the auto, you'll be in anyway. If you want to take the discretionary and add a contract or 2, you can do that too. If you're not trading the auto, you're going to know it's a great entry. Hi, Eric. I haven't gotten a hello from you in a couple of days, and I'm getting depressed, Eric. So you've made my weekend. Thanks for coming in. The large dots, I just told you, those are the revolutions indicator. That will ultimately be the indicator that tells you when the auto's taking a trade. And I'll show you, we have an awesome signal. I don't like software generated entry signals. We have a really good one because it's a multi-time frame assessment of range. Believe it, I'll show you the signal. You still have to vet the signal. You can't just take it as a dummy. And of course, now that I'm looking, I can't find it. Hang on a second. It doesn't happen often. That's why. Let me find it on crude. I'll show it to you. It's right here. You see this? This is called the continuation signal. And it's looking at a multi-time frame range chart. So you can get 2 range charts. Remember, range and Unirenko have a lot in common. The only thing that determines what a new candle forms is simply how far the market's moved. So when the range and the Unirenko come into perfect alignment, you get this intra-candle. And this continuation signal is one whopper of a signal. Now, we can't take this trade. We don't have any background, but it works. You just can't trade it. But every time you see it, it's really a good signal. In fact, it's uncannily good. See here, it fails. And here it fails. You're trading right into resistance. I mean, you have to vet it. But it works a big percentage of the time. I don't have that many days formatted, and that's the only one I see on it. And it's not going to give you 100% winners. And here's another one right here. Again, it's not a tradable entry, and it's right into a pivot, but you can see how it called the move up. It's got a lot of predictive power. It's still not good enough to give you an entry, but it gives a lot of throwaway to an entry that you like. So if you like the entry and you have the signal to boot, like right here, that's a winner. That's 2, 4, that's 1, 3, 5, 7, that's 8 ticks. That's a first target. So it's a really good signal. That's the one we look at. Eric, you know something? It's just my style. Eric is asking me, like I have everything formatted so that I have a first target and a second target set up already as part of my automatic trade management strategy. Like on 3 contracts on the NASDAQ, we're looking for 15 and 25. On crude, we're looking for 7 and 15. And Eric is saying, why don't I just have one that just I let run and run and run and take it out on a pullback? And that's because based on the average true range of a given move, we can readily get 25 ticks or 20, depending on whether we're trading 2 or 3 contracts. It's tough. You don't get many trades that go 9 and 10 points. So we're just basing it on probabilities, that's all. I mean, on the NQ recently, you're getting these 9 and 10 point moves. But I like taking these targets out. And I'll tell you one other thing, Eric, that I really like. When you take the trade out discretionarily, you actually close it, it always gives you slippage on the exit. When you take a target out, the worst that can happen is you get positive slippage. So if the trade is coming into a preset target and it's coming in with like a locomotive, you may get a couple of ticks at slippage and you'll take the 40 bucks extra. So that's why I just like it. It's just my style. And you don't have to, you know, you're automatic. You can format a runner that just keeps going and going. But I like taking the trade at preset targets. That's just my style. And there's no right or wrong with it, Eric. Sure, Richard. I can tell you on the NQ, it's looking at the other index equities. It's looking at the E-mini, the Russell, and the Dow. We had so much trouble getting 3 correlative markets on crude. The only one I can tell you is one is heating oil. The other 2 I can't tell you, and I'm really sorry. It's the only thing that I keep secret because everything else is an open, and I want you to know the information, but I don't want anyone else to have that and be able to format these correlative markets. I mean, the ones on bonds and the ones on gold, those were tough. And we have to continue to reassess because a correlative market has to have a correlation coefficient of 0.70 or greater. So it's got to move in the same direction or the counter trend direction at least 70% of the time, or we got to dump it. So we always have to keep checking the correlative markets every 90 days to make sure that they maintain their correlative power. We'll always have that power on the correlates on the index equities. I mean, the NASDAQ is always going to move in the same direction in general as the E-mini, the Russell, and the Dow. But you do get those occasional days where on the NQ, Google will miss a profit target, and since the index is market cap weighted, Google will struggle, will pull the NASDAQ, and the Dow will fly. The E-mini will have less difficulty, and those are harder days to trade. But those are few and far between. Usually all of these markets generally move in the same direction. Much greater correlation coefficient than 0.7. Some of these are 0.9. 90% of the time they move in the same direction. Maybe not as far, but the speed of the markets that are in here also really are kind of the magic mix. Obviously, the speed of the E-mini has to be much faster or you won't get the right color because the E-mini has is a slow market compared to the NASDAQ. These aren't stocks, Graham. These are all futures. Now, stocks trade exactly the same way, Graham. The only problem is I don't have a stock data feed at live right now. But you could trade this with, you could trade any stock instrument. Remember, these are universal forces that move price. We have correlative markets on, I don't know, about 500 stocks. So the chances are, unless it's a tiny biotech or a, you know, a bulletin board stock or something unusual, we can give you a quant line for it. And if I show you here in my list here, we've got stock lines for, well, I don't think I have them in here. We've got quite a few stocks. For Forex, we've got a whole bunch. We've got 12 Forex markets. Here's the dollar yen. Here's the dollar Canadian. Here's the DAX. Here's the euro dollar. And then we have some things that we've tried. We even formatted the Nifty for someone. We had somebody who traded in India, and we created a correlative market. It took us a while, but he wanted to buy the whole system, so we created a correlative quant line for him on the Nifty. So we can do it. It just takes a while, but stocks trade exactly the same way. No difference. So do the Forex markets. Forex markets are easy to get correlative markets on. Those markets are so interlinked. It's really a joy for quant lines on Forex. Correct, Barry. It can last 15 seconds or 2 minutes. You're right. I mean, these are fast-moving markets on the NQ. The way the NQ is moving today, I mean, the markets, you know, some of these trades lasted 30 seconds. Some of them lasted 60. Very, very quick trades. But that's just because, remember, we're trading momentum. We want those trades on this dual Laguerre assessment and our chart Laguerre. I mean, this is acceleration. We want these trades to accelerate through our price entry and up. So we're looking for one rapid move. And if the trade just kind of languishes around, which is what happened on the on the trade I took that I didn't like, that really did smell like dead flounder, that's why I knew there was a problem. It just wasn't moving. I think you saw it, and usually they fire through. So these trades are going to move very quickly. Okay, John. Oh, sure. Listen, John. John is asking, if we do have the edge, why stop? Why just not keep trading on? And you know why, John? It's because even if it trades with an 85, let's say 85 out of 100 trades are going to be a winner. You just don't want to walk into that loser. I think and listen, this is just my recommendation. I know that there are traders who don't stop. I mean, they were putting their numbers in the room today, and we get a trader who made $1,100. We didn't make nearly that much money because while I was talking, he kept trading. You can keep trading on. My recommendation, though, is you want to set a profit target based upon how much you want to make every month, every week. And I just think it's the conservative thing to do. That's all. As you can see, if we would have kept trading today or this week, we would have made a ton of additional money. But remember, as we move into the late morning, volume starts to wane, the trades start to gather more risk. And it's just my philosophy. And it's all based upon my risk tolerance, not my fear, that You can be up $400 or $500, walk into a full loser on 3 contracts. You're down $300. Then you want to trade back. So then you take another trade, and now you're a little unnerved. So you chase the trade. Now you're down 2 trades, and you're even more angry. So why churn the market? Why even give the market a chance to let you churn it? If you're out in 6 minutes on 3 winners and you've got $450, why keep going? You can if you want. That's just it. Listen, I'm only giving you my philosophy on the entries, how you manage the trade afterwards. I give you my recommendation. We do the configuring for you. Will you tell us how many contracts you want to trade? You can take a 2 contract, you can have 2, you can have 3, you can have an ATM for 4. We'll configure them all for you. We do the complete setup. You can take your first target, your second target, where you decide. We're going to give you our recommended targets, but you can ultimately, other than the entries, which I think are pretty much set by our rules, you can manage the trade in any way you like, but I just think my recommendation is very, very conservative, and I just like to stay conservative. The one thing you don't want to ever do is give the market back any money, and I just think ultimately you will definitely hit a loser. It's just a matter of time. This week we never did, but that's rare, and I don't want to hit a loser on the 6th trade, and I don't want to give back any money to anyone. And you know, John, that trading out into mid-morning during lunch is terrible. I mean, just a bad time to trade. I base it on the ATM, and I'll show you. I hate to, well, at the end of the week, and I'll show you how we do it. I think you're going to be really surprised at how we do it. Let me just bring up, because it will matter for the month, but I'll take 1 trade and I'll show you how we do it. I'll just factor this out when we look at our month. That's all. And everything is still up. I don't even have to do anything. All I've got to do is we have a pre-configured entry tool. So I'm just going to take this trade. I'm not looking for a winner. I just want to show you what happens when we take the trade. I'm going to take it with 3, and I'm going to buy an up close. Now there's the target, 1 tick above the close of the candle, set automatically by the tool. Now you see this in the room when we're trading. Now, of course, now the candle won't go up, but I want you to see it trigger. I could just buy the market. And I may have to if it doesn't do what I want it to do. I don't want to waste time just waiting for this thing to. All right, let me close this. And what I'll do is I'll just sell. Yeah, I'll just buy. There it is. You're in. There's our first target. There's our second target. There's our stop. It's all there, right in front of you. Now, and then you see how the stop is trailing? Every time the move comes up, it's going to pull the stop up. Watch. Now, I don't know if this trade is going to work. I just took it arbitrarily. I hope it goes up a few ticks. You can see the stop get pulled. There it goes. See the stop jump? There's our first target. Now, if you want, for some reason, if you're trading into a pivot, you can take the first target and move it down. If you feel like the trade is moving poorly, you can always take the stop and tighten it. You do whatever you like in terms of trade management. But that's the pre-configured first target, second target, and stop on the trade. So I'm going to close it so we don't gain or lose. Let me see if I can close it right at break even, right there. We're out of the trade, so it's not going to change our total much. So you see exactly how we manage. We use this tool, which has a patent pending, which we built. Really easy to adjust stops and targets. Now, that first target and second target, I pre-configured. If you want us to configure a different first and second target for you, we will. If you want to trade more contracts, we'll do that for you. If you want to trade fewer, we'll do that for you too. We have guys in the room trading one contract all the way up to 20 contracts. It's up to you. It runs on Ninja, Abby. I start at 9:30 in the AM. Sure, Barry. Take a look at this trade that I took. Hope I'm on the right day. Hold on a minute. Let me just make sure. Yeah, here it is. Oh, geez, I'm sorry. I just could have done this a lot quicker, but here we are. Look at this trade right here. This is it. Look at the Laguerre on the trading chart. I mean, you could say it's sloping up, but I'm telling you, that's not much upward momentum. It's pretty flat. And what I would like to see is the trading chart Laguerre look like that. I mean, I want to see that the trade is accelerating up. This momentum is about flat. So the speed of the move is constant. And that constant speed is not good for us. We want an accelerating move. In addition, the long-term Laguerre, which is really critical for the trade, the long-term acceleration of price was not there. See that green line? I didn't have it. And that trade, it reflected. I'll show you the time on this candle. This candle was 42.22. This candle was 42.34. So that's 12 seconds. This one, was this 35 and 35? Now this one went up quick, but this trade from here to here, this is only 4 ticks, and it just sat there to me for a long time. And I just did not like this momentum assessment. And it just missed. But once it started coming back against me, I was not going to let this trade, I was not going to let this become a loser, because it really wasn't a good entry, Barry. And you can see that from the chart Laguerre and the multi-time frame. I mean, you want acceleration. And when you got it, it's a much, much better trade. And the chart Laguerre, this is the only time where assessment of price on your trading chart matters, or data, because this is a second order derivation. This is a measure of the change in speed or change in velocity. So this is, being a second order metric, has value even though it's coming on your trading chart. It does have value. And the guy who invented it, George Lane, proved it had value in 1957 when there was no institutional money in the market. It still has tremendous value, but we got to trade it in the direction of the trend. Yeah, let's take a look. The market. I have an E-mini chart. We can look at it really quickly because we're running way over. I still got a lot of questions. Here's the E-mini. And you see the E-mini is just very different. Look at this. I mean, look at this trade on the E-mini right here at 12.12. I mean, this is a gimme. It's a pivot breaker, dual dots, quant, long-term Laguerre. And look, and here's, Barry, look at the chart Laguerre momentum. Look at that. That's what we want to see. And up you go. It's a huge move up. And it just so happens you got alignment here. And you got a winner here. Here, you don't have the long-term Laguerre. You have no trade. Here you do, and you have a winner. Here you don't have any alignment. Here you don't have any alignment. Here's your pivot breaker and your huge winner. These are nice moves. Now this could have been traded right here on that internal wick pullback. Right here. You would have gotten the first target at the pivot, and then based on how you wanted it, what you wanted to do, you could have closed the trade here and re-entered on the break, or just held your breath and you got in the whole move. There's no right way to do this. As long as you've locked in your profit and your stop at break even and you have no risk on the pivot, you can close it at resistance or hope the market's going to move through. Either way, it's okay. And look right here, no background. God help you if you try to trade. You're going to get killed. And this is where everyone's getting massacred, right in here. Look at this move, right there. There's your pullback. But gorgeous trade all the way down. So, I mean, the E-mini, look at this trade, break of the pivot. Actually, it's here, all the way down. I mean, what can I tell you? There's your, now you don't have the long-term Laguerre here. You have no trade. Here you have the long-term Laguerre, and you have another winner. And this is just all junk. So you have one winner, two winners, three winners, 4 or 5 winners. Just say 4. 6 winners, it's small. 7 winners. 8 winners. There's your, well, you can't take this trade. You don't have the long-term Laguerre. Not going to get every winner. But when the market was chopping, like right here and right here, and the chances of getting stopped out were high, you're not in this move. And here's another potential trade right here. This pullback inside this wick, inside this candle body, dual dots, long-term, you have your quant, long-term Laguerre, short Laguerre, just the way you want it. Heading up like a rocket ship, there's your continuation trade. Cyan, in this case magenta, great trade, great color to trade long. You just need that pullback to take the continuation. So, I mean, the E-mini today, you could have made a mint. And look at this continuation short trade. Where does it go? Nowhere. Look at the chart of the long-term momentum. It's yellow. It's no trade. This trade continuation short, order flow is blue, no trade. Look at the long-term Laguerre, yellow. Cannot trade it. This is how you censor all these losers. If you don't have long-term momentum in your direction, you're likely to get a loser. And right here, there's a lot of traders who took this continuation short. A lot of traders took this continuation short and they got blown up here. And if they didn't get blown up there, the market just turned on them right here. And the turn of order flow here was the harbinger of the whole turn in the move. And we would have been out of this whole mess. No chance for a trade. That's what we're looking for. As much as we're looking for a great entry, we're looking for the ability to consistently sidestep losers. And the long-term Laguerre censored all these trades for us. It does a great job of keeping us out of bad trades. Yeah, we do. I'll just call you Bar. We do. Just send us an email, Bar. Avi, I have all the rules and setups written up. If you come aboard, you'll have everything on a PDF. Sure, everyone in the room will get the recorded webinar. Okay, MM, I wonder if there's a way to play some visual and sound customer alerts are met. That would avoid to stay in front of the screen all day long. MN, let me just read your next comment. Do you intend to create an upgrade allowing to determine what we're doing, MM, is we're doing better. I mean, if you come aboard here, you're going to get a big discount on the auto. We're going to give you an auto. I mean, the auto is on 9 markets. It's going to trade for you. Now, if you want a custom alert, you have to tell us exactly what you want that alert to be. And I'll put it on Sergio's to-do list to do for you. But it's got to be on some specific individual independent variable, like an alert on here, or else you're looking at an auto trader alert where you have multiple independent variables, and then you're best off just waiting. You're going to get an audible alert when the auto takes a trade. You're going to get a big beep right here, and it's going to beep for about 15 seconds. So that's your best bet. But if you want to create your own individual, and it requires, green, 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 here, what you're doing really is creating a modified auto. That's hard to do. So this is really, in essence, we're doing what you want. And it's going to be operational on 9 markets. And you don't have to watch it. But we're going to have that dashboard that shows you the signal intra-candle. So if you want, you can just trade it on a discretionary basis. So this is what you want. Just give us a couple of weeks and you'll get it. I take the trade, it's real simple. I'll bring you the tool back up. Like right here, I don't have an entry. You always take the trade, you never trade intra-candle. That is a disaster if you do it. I'm not going to say you're going to go bankrupt, but your chances of going bankrupt are high. Now, let's say you wanted to take the trade long here. We don't have a long trade because we have resistance. I would just press this button. The reason you don't see it, let me close it, is because this is the E-mini and I'm trading the NQ. If I wanted to take this long, I would hit buy it up close. But it's always a candle close. Now, this is not an entry, but if that was an entry, that's all I would have to do. Just hit that button, buy it up close. That's it. This will track where the up close is and get you in 1 tick above the close. And you don't have any muss or fuss. You don't have to chase the dome, run around with your head cut off. You're fine. But it's always a candle close. We call it, this is called, I forgot what it's called. Optimized, this is just our optimized trading software. That's all it is. It's the full system. It's the multi-time frame optimized full system software. I mean, we don't have any fancy name for it. We have variations of it, which have smaller components, like the order flow Laguerre, in which we just trade with order flow and Laguerre, but this is the full system. And honest to God, I mean, we have no fancy name. Hang on one sec. And I just want you to know, Rory put a link in the room. The normal price really is $29.99. It comes with a discount code that you enter. Only the first, I don't know how many of the first 5 get that. You put the discount code in, it's going to drop to $13.99. And what Rory just did is you're going to get the market analyzer for free. And the market analyzer, I didn't show you, and I don't have time to, but it's going to show you. You can watch 9 markets, and it's going to tell you when all this alignment appears. It's awesome. I just don't have it configured, and I just don't have time to show it to you, but trust me, the market analyzer, if you want to watch multiple markets, the market analyzer is something that we normally sell for $6.99. So you're going to get that tool. And if you're interested in trading all those markets, that's a great way to do it. I mean, if you want to add the Dow to this and the E-mini to this, and you want to trade bonds and notes with this, or if you want to look at it, it'll look at 25 or 30 stocks for you. It's a great scanner. And it doesn't look at rising triangles, falling triangles. It doesn't look at all the junk that all the other analyzers look at. It looks at the alignment of money flow, the multi-time frame assessment and trend. It looks at momentum. It does the appropriate analysis to get you into a trade, and it's going to fire and give you plenty of time to get into the trade. You can, Abby. I just want to say one thing, that we do the full setup for you. Do not worry about the technical aspect of it. Do not worry about the automated trade management strategy. We do everything for you. If you have your own strategy you want to configure, Sergio will do it. If you want to take ours, he'll do it. And he does the whole setup for you. Let me tell you, I couldn't set this software up from scratch if my life depended on it. And I depend on him. He's got a master's in computer science. He's a brilliant guy. And he will give you technical support throughout. I mean, anything ever happens, there's a glitch or something, we'll fix it for you. Thank you, Barry. Listen, learning from your mistakes, if you can't do that, you can't be successful in life, I think. Being really honest with you. You know, all our mistakes hurt, but if you can't learn from them, how do you stop making them? Okay, if it has live trading, then you're good. Listen, I just don't want to speak for Ninja, Barry. I mean, I know what the software can do. If you can trade a free version of Ninja, you're good. I just didn't think you could, but if you can, you're good to go. You don't, Bar. You don't. You can get a free data feed for the demo version. You don't have to pay for it. It works great on Forex, Theo. I mean, really good. But I think Forex is tough to trade. I think there's too much. I think it's too easy to make money in the futures market. If you're really a Forex devotee, it's going to work terrific. Our correlative market analysis, our quants on Forex are great because the Forex markets are so interlinked that the quant line is superlative. And then you've got dual gear momentum, multi-time frame assessment of trend, and you have order flow because we're just looking at market depth. We're not looking at executed orders. We're just looking at how many traders are on the bid side and how many are on the ask side. And that is a good assessment of buying and selling pressure if calculated the way we do it. And it'll really give you a nice Forex system. I just don't have a Forex data feed set up. I don't want to take it. I could do it. I have a Forex data feed, but I'm telling you, if I covered this NQ up with my hand, which I can't do, and put up here the euro dollar, you would see exactly the same thing, and you would not know the difference. Now, we trade a different candle. We trade a 428 on the Forex, not a 10-420, but each individual market has its own Unirenko, and we would do that for you. Yes, he's sending it out today, David. Absolutely going out today. Thank you, Eric. I appreciate that. You don't, Bar. You don't. You can get a free demo data feed. Abby, we will. The link is going to take you to a $2,700 price screen, but just put in the discount code and it will drop to $13.99.
That link has the code already.
The link, oh, well, they're saying it's a $2,700 link. Somebody said it was.
Well, if they use the discount code Mark, it'll change it.
Okay. The discount code is Mark. The price you're going to see is $2,700. Just put Mark in the discount code field, and then when you press the button, you're not putting in your credit card information. You just press the button, and the price will drop to $13.99. No, I got you, Bart. You don't. No problem, Abby. Sure, Graham. We will call you. Richard, you can trade the system anytime. The only thing that I warn you about is trading on light volume, which is true of anything, stocks, futures, Forex, anything. As long as you're trading with good volume, like right now, if you look, this is the only accurate volume indicator I know of. You see what this is showing you? It's the absolute number of contracts crossing per minute. And as long as you're crossing about 500 or more per minute on the NQ, you're good to go. Now you see you're at 600. Now you're at 700, 800, 900. See how far it goes before 1100, 1200. This is a nice move on great volume. Now when it hits 60 seconds, it's going to reset to 0. There, see, it's starting over again. But so you know you're trading on good volume. That's all you need. On NASDAQ and crude, I both look for 500 contracts a minute. If you've got that, you've got enough volume to trade. And you could trade at any time. The reason the mid-afternoon is tough is you often will get 125, 200 contracts per minute, and that's when you don't want to trade. As long as you got volume, you can trade it. I mean, I used to trade gold in the middle of the night, and let me tell you, the market makers kill you. And I'll just tell you really quickly, I had a gold trade that was down 3 ticks on a 10-tick stop, and all of a sudden I hear stop filled. And what the market makers did, because there was so little volume, is they pulled the price up to my stop, filled it, and then put it right back where it was. I called NinjaTrader, and they checked the tape, and the price came up to my stop for a millisecond, took my contracts out and stopped me out. That's why I don't trade a low volume market in the middle of the night, because that's what market makers do. They see your stop and they steal it from you. And just trade a decent volume and you're good. And you're good. Doesn't make any difference what time you trade. Or can we set up the software as a normal software? I'm not sure what you mean by normal, Barry. I mean, we're going to set it up for you, so you don't have to worry about that. It's only configurable on NinjaTrader 7 or 8, but we set the whole thing up. You don't have to worry about that. Absolutely, John. Live trading room, everyone who signs up is in the live trading room, for sure. Thank you, Jim. I'm gonna, you know something, all right, hold on a minute. Let me see if I can, I know I'm gonna wind up in trouble. Let me just answer all the other questions first. I just have someone that wants to see the Forex markets and I'm gonna configure it. Yeah, Jim, Sergio does everything on Ninja for you. He's gonna log on to your computer and configure everything. And he's not gonna log off until it's working perfectly. Bart, you keep asking me that, you don't. Yes, he accesses your computer. He's got a few ways of doing it. Join me. You can download TeamViewer, a free version of TeamViewer for your computer. We have a paid version, so he can access your desktop in 15 seconds, and he'll configure it on your computer. Now, if you give me 1 second, I'm going to try and set up really quickly a Forex market. Let me disconnect my CQG. Let me change the workspace. Let me close this workspace. It should collapse in a second. It's not collapsing. Workspace, close. Getting the signal here. Oh, okay, I can't close it. Let me open the Forex. Workspace, open workspace. Hang on 1 second. I gotta move my chat box. Go here. It's nice, nothing's open, but it's really easy. Let me connect my FXCM data feed. Hang on 1 second. Hopefully it will connect, I pray. Great, connected. So now I'm gonna bring up a new chart, and I'll bring up the pound dollar, okay? Hang on a sec. Here we go. All right. Now this is on the wrong, obviously it's on the wrong speed. Let me fix it. And then I'll just insert the template and you'll have it. Here's the Unorenco. The Unorenco is a 428. Let me open it up. Let me insert the template. There it is. Here's your pound dollar. Right here. I don't see any great trades on it. Here we are, right here. Perfect trade. There's one. Got nothing here. No quant. No long-term Laguerre. Zilch. See how order flow? No trade. Let me just go back a few more days than this. Let me load 10 days. I'm telling you, you're going to see the same setups. How frequently you see them, I don't know how much volume. I mean, I can put up any pair for you that we have. We have 12 pairs I can put up for you, but they're all going to look exactly the same. Let me go back. This is where we were. Now I have to change it. This is the volume weighted average price. It's based on market close. There's your entry right here. I don't have it formatted correctly. It's got to change. And there's your winner, because the Forex doesn't have a session. So it's got to be set to 24/7. So this line is not accurate. I'm just not going to bother to do it here. Now here's a trade right here. If no trade here, no trade here. Take that pullback and continuation. And then look at, this is what you live for. There's your break and there's your trade. That's a monster trade. So you can see the Forex really does well. Really does well. Yes, on the scanner that we're giving you for nothing, you can scan for the best Forex pair out there. That is exactly right. You can have 12 Forex pairs formatted, and you can wait for the scanner to give you the signal to trade the best Forex market. So it's a really good, I'm telling you, it's a great system for the Forex, Theo. It really does. It's going to wait to give you a trade. And I mean, here's the other setup too. You have this one here under the pivot, goes up to here. Now this one is also tradable. If you have a pullback, you can see the gear on the trading chart is heading up. Enough for me. I've got my long term. I've got my quant. The correlative markets here are very strong. You've got one trade here. If you're out on the retracement, you're in again. And up here, if you're out on the pullback, you take the pivot break and you're up forever. Now I wouldn't take another trade. This trade I would consider to be overextended. It's a winner, but I wouldn't take it. You've got enough here. And here's your short trade. I'm going to ignore the VWAP right here because it's inaccurate. Boom, another one. So you're going to have a ton of winners. Trust me. If you let me save this workspace. If you use the scanner, you're going to get scanned into a lot of trades. I'm just going to put the futures back up again and reconnect my futures data feed, just so when I open it on Monday morning, I don't open the Forex markets. So I think that's it. And you can scan them, and you will get the best Forex trades. So that's just what we're adding in. So I'm just going to connect my CQG. So listen, you'll get this is a long webinar, but you can scan through it. It'll take about 2 hours or so for it to render and allow me to format it, but we'll send it to you, and you will get it if you want to hear it or if you missed it. So I hope I'll see you in the room on Monday. We are going to make money, and you see the transparency we trade with. We have Chart Trader up at the end of the session. We go over every trade with the Ninja Trader backend open. I look at the amount of money we made on every trade. Everything is right out in the open, and we are going to make money if I have my way about it. And I try really hard. It makes a lot of difference to me because I consider my traders my family. I have people who've been in that trading room for 4.5 years. And I really feel it's like my mandate to make money for them, because I feel like you're coming aboard and you're trusting me, and I want to come through for you. So have a great afternoon. No matter what you do, I really wish you the best. Thank you so much. Kevin's right, spectacular week, Mark. Keep up the great work. Have a great weekend. Kevin, you too. I'll see you. I'll see you guys on Monday. Have a great weekend. Have a lot of fun. Relax, and let's go beat this market up on Monday morning. Take care and have a great weekend. Bye bye.